Hello, welcome back to class. And today we'll be discussing about the classification and type of taxes, classification and types of taxes. And in doing this, we will look at direct and indirect taxes, the meaning and examples. We'll look at the progressive, proportional, and regressive taxes. We look at the major tax system, tax type, income tax. In terms of, we'll also look at VAT, we'll look at the custom and excise duties. We will compare between the tax type and their impact. And lastly, we'll look at the factors influencing the tax structure and incidence. This is going to be very brief while we have the full notes that will be provided in the class. And taxation is a central instrument of government policy, serving not only as a source of revenue, but also a tool for economic regulation and social equity. And to fully understand its application and impact, it is essential to classify and differentiate between the various of type of tax, as each carries distinct objective mechanism and effect on the economy. Looking at the direct and indirect taxes, when we talk about direct taxes, these are taxes that are levied directly on income or wealth of a person or entity, and the burden cannot be shifted. And the basis is the ability. It is based on the ability to pay. An example of this, just like we've been discussing, is the personal income tax, the company income tax, the capital gain tax. And when we look at the impact is it promotes equity but requires strong administration. For indirect taxes, this is levied on goods and services, and the burden can be shifted to the final consumer. And the basis is the consumption expenditure. And example of this is the value-added tax, the custom and excise duty. And it's easy to collect, broad-based, but can be regressive. And when we look at the classification, the tax rate structure, the classification majorly, classification of tax, we have the progressive tax, which is a tax rate increases as the tax base, that is the income, increases. So if I am collecting 2,000 naira now, and I am paying 200 naira, and I'm now collecting 10,000 naira. That means possibility of me paying about 1,000 naira stands. So the more I collect, the more income is, the more I pay for tax. And the goal is to ensure vertical equity. That is, the higher ability to pay is equal to higher tax rate. And the example of this is the personal income tax uses a graduated scale. And for proportional tax, which is a flat tax, it's a constant tax rate which is applied regardless of the size of the tax base, the income, the profit, whatsoever. And this is company income tax, which is 30% for large complaints, regardless of profit size. And we have the regressive tax. And for this, the tax takes a larger percentage of income from low income earners than from high income earner. An example of this is the value added tax. It consumes a larger share of the poor household income. We have the types of taxes, and we will first be looking at the income tax. And when we talk about the income tax, we have the likes of the personal income tax, the company income tax, and petroleum profit tax under this. And for the personal income tax, it has a jurisdiction under the state government, and the basis is an income of individual, the sole proprietors, partnership, salary, business profit, rent, and it's actually progressive in nature. And for the company income tax, its jurisdiction, it is under the federal government, and the base is from profit of incorporated companies, and it is proportional in nature, flat, as is said. And we have the petroleum profit tax, and this is under the federal government, and the base is the profit from upstream petroleum operation, and significance of this is a major historical, it's actually a major historical revenue source. And looking at the consumption tax, which is indirect taxes, and we have the value added tax, and the rate as of the Finance Act in 27.5%, and the basis on supply of goods and services with some exemptions, and the collection, it is collected at each stage of production or distribution, and the burden is on final consumer, and it is regressive in nature. We have the excise duty, which is the specific, often seen on luxury goods like alcohol, tobacco, sugary drinks, and the purpose is to raise revenue and discourage consumption of harmful products. And lastly, on that is the custom duties, and it is on imported goods. And the purpose is to raise revenue and protect domestic industries. Other key taxes in Nigeria include the capital gain tax, and this is on profit from a sales of chargeable assets like stock, bonds, real estate, and it's actually a direct tax. We also have the stamp duty, which is on legal instruments and documents, in terms of agreements and mortgages, and the purpose is to validate documents and raise revenue. We also have the education tax, and for this we see the rate as 2% of accessible profit for companies. The purpose is to provide a dedicated funding for tertiary education infrastructure. And we have the comparison, we've talked about it in terms of the equity, fairness, the direct taxes ensure I mean it is high in terms of fairness, that is progressive based on ability to pay, and for indirect tax it is low, often regressive based on consumption. We have others there can go through, and there are factors influencing the country's tax structure. The first is the level of economic development, and this for this you can see it in terms of developing countries like Nigeria, with larger informal sector is equal to it leads to greater reliance on indirect taxes, which are easier to collect. And for developed countries, larger formal sector leading to greater reliance on direct taxes. And another factor influencing the tax structure is the administrative capacity. Talking about the strong tech-enabled tax authority can effectively administer complex direct taxes, and weak administration forces reliance on simpler indirect taxes. And we also have the government policy objective as another factor in terms of redistribution of wealth, protecting of local industries using the custom duties, and also promotion of investment, which offers the CIT incentive or holiday. And the last factor is the social or political factor. And for public, it's actually public acceptance of taxation. A visible high personal income tax may be unpopular, and for political will to tax powerful sectors. Example include the effectively taxing the informal uh, sector. In conclusion, taxes are primarily classified as direct on income and indirect on spendings, and the equity of a tax is determined by the rate structure, which is the progressive, proportional, and regressive. And the Nigerian major tax include the PIT, which is progressive, the CIT, which is proportional, and VAT, the VAT, which is regressive and indirect. And the design of a tax system is a trade-off between equity, which is fairness, and efficiency, which is ease of collection. And a country tax structure is shaped by its economic reality, administrative capacity, and policy goal. Thanks for listening.